Hey guys, this is Scott Horne, and in this video, we're going to take a minute and just talk about some owner finance paperwork. We're going to go through and talk about the contract and the sales side both a little bit, just some basic things you should be looking for along the way. So if you find this video helpful, don't forget to like the video. If you have any comments, take a moment and comment below. We'll do our very best to answer those for you. And don't forget to take a moment and subscribe to our YouTube channel as well. So doing an owner finance transaction, now there's two parts. There's acquisition and there's sale. And as part of the acquisition, obviously you need your contract for sale and you need appropriate disclosures between you and the seller or you and the buyer. Sometimes there are contracts floating around out there that are decent that can be used, but you should also ensure that in whatever state you're doing business, you know exactly what that state requires, such as Texas. That is very problematic because we have what is called the underlying lien disclosure notice and insurance disclosure notices that have to be provided in Spanish and English. And there's a whole slew of items that should be disclosed between a seller and a buyer, so everybody goes into a transaction with their eyes wide open. So it starts with that contract and proper disclosures. From there are certain things you should obtain from the seller to help you understand what it is you're buying, if you're buying a property subject to, let's say. And in that instance, that is, you should do your best to get a copy of the underlying note, deed of trust. You want to know what it is your obligations are for payment. You should get a copy of the most current mortgage statement. And guys, keep in mind, if you're buying a property that is in some type of a pre-foreclosure mechanism, the mortgage company typically stops sending standard mortgage statements. They send us foreclosure type statement. You may have to go back several months to get that most current mortgage statement you can find out there that you can utilize more appropriately. And what you're looking for in that mortgage statement is you're looking for the name, address, and phone number of the lender, the account number, the loan balance at the time that statement was issued, because you can always bring it forward using a simple amortization schedule, the interest rate, payment amount, estimated taxes, insurance. Are there other obligations to pay, such as mortgage insurance, called MIP or PMI possibly? Or is there an escrow shortage that may or may not exist? You want to know what you're obligating yourself for in those types of situations. So you gather this information, and you should also be asking when you're buying a home for the most current insurance policy. You want to see what that loss payee looks like so that you can utilize that for your insurance. Or if you're going to intend to do a back-end owner finance transaction, your back-end buyer may need that as well. Those are your basic docs you need to gather from a seller, have executed by between you and your seller. Now, your state may require other disclosures, such as a seller's disclosure of property condition. Always good to get in that regard. Maybe it requires a lead-based paint disclosure of some type. Awesome. Get these things, especially if you're buying a home, so that if you ever intend to sell it, you can refer back to that as well and or include it to your back-end buyer at whatever time you can choose to do that. So once you've gathered all the appropriate informational documents from your seller, you have your contract and disclosures. Of course, you want to turn that contract and those disclosures into your closing agent so they can start that closing process moving forward. And of course, from there, you're going to have an earnest money check that you will typically write to your closing agent as well. Now, at the closing table, what should you be expecting to get? Well, there's going to be a settlement statement. Now, if you are an investor buying a property, you're going to be getting a HUD. We commonly call them a HUD-1 in the industry. However, if you're selling a home to a homeowner, a consumer, that document is going to be called a CD or a closing disclosure. It's a lot longer, much more difficult to prepare, and it's really the combination of a HUD-1, a good faith estimate, and a truth in lending all rolled into one today. And so knowing what you're doing exactly would depend on what type of a transaction you're doing along the way. Now, if you're buying a home subject to the existing debt, you want to be certain you're getting a deed from that seller and ensure that deed gets recorded reasonable and timely. Control that property so that the seller no longer owns it. And always you should be giving back to your seller a security instrument. Now here in Texas, that's a deed of trust. Other states it may be called something a little bit different, I get it. But you want to protect that seller at all times so that in the event something happens to you, you have to get out of this deal, they have a reasonable mechanism to regain ownership of that property. Always protect your seller, because it's when we stop protecting our sellers that cause them trouble and problems and things of this nature. That's when they might go to their state legislature and explaining to them these situations. And now we buy more legislation that might be negative to what we want to accomplish. So if we're buying a home sub 2, there's going to be a settlement statement, a deed, and a deed of trust, and there's going to be some standard disclosures that any closing agent or title company should be providing. Things such as an attorney disclosure letter for whoever the attorney was who prepared the basic documents, an affidavit of debts and liens, maybe marital affidavits and items of this nature to ensure everybody is telling the truth on whether they're married or not married, things of that nature along the way. And there may be a slew of other disclosures that the closing agent and or title company will utilize in a traditional closing that will be used also in our creative finance subject to transaction. Now, when we're selling a home to a homeowner, whether there's no debt on the property or debt on the property, doesn't matter, our buyer is going to be giving us back a note and a deed of trust. And of course, that note is their promise to pay. And the deed of trust is what protects you so that if your buyer defaults, you have the ability to foreclose on that home and take the property back. Now, in return, you're going to be giving your buyer a warranty deed or a special warranty deed. And oftentimes, those deeds will have a language called a vendor's lien, which basically details the mortgage that is being provided by the buyer to the seller. Fairly easy. Now, just like in the front end transaction, there are going to be other standardized documents that come into play. The affidavit of debts and liens again. Other seller and or title legal type disclosures, the attorney disclosure letter again, and things of this nature that are fairly basic. Take the time, look at them briefly, know what's going on. Your closing entity may or may not provide a substitute 1099 or 1098 along the way based upon the transaction. But know what it is you should be getting. If you're executing a contract to buy a property disclosures, take the time and read them. Understand, become a student of the game and the industry to know what you should be looking for, whether you're using a state promulgated form or some other person's contract for sale. Know what the disclosures that you should be disclosing between you and a seller or you and a buyer, whatever it might be. And the mere fact that it might be a seller's obligation to give you something doesn't mean you shouldn't help your seller provide those to you, because they simply won't know what those are. They're not in the industry. And even if they have a realtor representing them, that agent rarely knows as well. So having a good understanding of what is needed, what should be included, is so important in your documentation. When you're at the closing table, know what to ask for, know what to look for. Read your note, at least the basic terms of that note, to know exactly what you're obligating yourself to do one way or the other. Look at your deed of trust. Maybe if you didn't tell somebody how to prepare it, there might be other clauses in there. If you're buying a home subject to the existing debt, you may not want your deed of trust to have a due on sale clause on it. This is a standardized clause that goes in most deeds of trust. And so when any attorney or doc prep firm is preparing these, that's going to be standardized language unless you have requested to remove it. And you've got to be proactive in what you do, and you do this in writing to ensure that it's done. Then review your document to know exactly what it is. Look at your default provisions, whether you're buying or selling. Must a seller give you a 10-day notice of default, 30-day notice, something different? You can negotiate anything by and between your seller. The same thing for your back-end buyer. What is the minimum requirement you must do for that buyer? And there's rarely a maximum, but you can put that in your contract and in your mortgage documents in order to protect you appropriately. Again, knowledge is power in our industry. Understanding our contract documents, our disclosures. What are the documents I should be getting from a a seller along the way that I need to document my file. Same thing with the back-end buyer. What are the mortgage documents, either way that I'm receiving or I'm getting, whether you're selling or buying a property is all important. Now, along the way, there may be some other documents that you'll be receiving from your closing agent or that you might want to obtain somewhere along the way. One might be the title commitment if you're getting title insurance, or maybe it is an abstract of title. Look at that. Ensure that it is going to be clear and that your closing agent is clearing issues on your behalf along the way if there are any type of title defects that need to be fixed. By title defects, I mean judgment liens, child support liens, items of this nature that could show up that you don't want to buy a property subject to those items. Now, I will make a comment. Every once in a while, we investors do buy properties subject to existing debt, and various liens do get left on the property, but we understand what those are, and we understand how to navigate those appropriately. But understand how to read a title commitment. What should you be looking for? Then if you have questions, take a moment and ask your closing agent to help explain to you what you're seeing and to make sure you understand exactly what you're buying. Same thing with a title commitment and a title policy. Now, if you're getting title insurance, you can pretty much rest assured that your closing agent is going to clear title for you. So you're getting clear title to the property subject to whatever liens may exist in the home if you're buying a home subject to the existing debt. So understanding basic premises and things of this nature are so important to look at. Running an amortization schedule so you know where you stand, so you can look at it at any point in time if you're buying a home or even selling it. Providing a copy to your back-end buyer may be important. But having access to that information just helps you track where you are, both on your underlying debt as well as on any back-end debt that you might have along the way. As I said previously, knowledge is power. Get good information, know what you need to have, and ensure you have it on every deal. Ask questions. Don't just walk into a closing, sign documents, and walk out. I see that happen so often, and the name on the documents are wrong. The name of the company, the LLC, the limited partnership, is wrong. They're not reading what they're signing. They just think automatically it's all going to be good. Guys, closing agents mess up. It's just a nature of the beast. Attorneys mess up. Yeah, usually you can fix these very simply, but it is so much better to do it at the closing table or before you go to closing and eliminate these problems than waiting a month or a year later to go, oops, we got a problem. So take the time, understand you're buying an asset, protect yourself, know what it is you're getting, what you're signing, what you should be obtaining, whether you're buying or selling, and move forward from there. So guys, I hope you found this helpful about owner finance documentation, buying or selling along the way. If you liked it, take a minute and like the video. Don't forget to give some comments below also. And don't forget to subscribe to our YouTube channel. We'll see you guys next time.